Welcome back, class. Glad to have you here. We are in our final video series when we're talking about how to offset interest costs when we're saving money, investing money, spending money, borrowing, creating wealth, investing, all the above, right? So in this scenario, we're going over how to offset interest costs with an insurance policy. In the first video, we went over velocity banking, offsetting when paying off debt. And the second part was a quick real estate investing example of investing in a property with none of your money using a HELOC, right? And now, in this part, we are going to assume, in this example, we have a insurance policy that has $100,000 in cash value, right? And it's earning 4 to 6% on 100,000. Do the math, 4 to 6 grand. Okay, not a ton of money, right? But that is 4 to 6K tax-free money that is growing. Now, let's say in this scenario, this person takes out a policy loan against the 100K for 50,000. The interest rate is 5%. So in a year, 2,500 bucks. 1 month, 208 a day, between $7 and $8. Interest is calculated simple. Okay? Now, let's say they took that 50 grand. They decided to invest in their business, in what they know. They are a practitioner. So let's just say they invested 50 grand in their business to produce more revenue. They have a debt of 50K inside of their policy, right? They still have 100 grand growing at 4 to 6%, even though they borrowed 50. Okay, what happened is the insurance company gave them 50 grand and charging them 5%. Now we're going to look to offset this. Okay, just by this alone, we offset, because we're earning 4 to 6 on 100. We only took out 50. 5% on 50, 2,500 for the year. So notice how, even though I borrowed money, I'm still offsetting the interest right here. But that's not enough, right? We want to be able to keep going with the money, right? We want to be able to use the money that we're growing inside of here. That's the whole point. So, come down here, we invest 50 grand. Let's say that gives us an average amount of 10 new clients per month. That's 120 clients a year. That's reasonable. That's 2 to 3 clients a week. That's very reasonable, right? With the amount of hours that we have in a week. Very reasonable. So let's just say that their average client is $1,500. Right? That's how much they'll make for each client, an average. $1,500 per client. Okay, C stands for client. That's 120 clients in a year, 180,000 in revenue. Okay? Look at that. 50K invested to make 180, right? Minus 180 from 50, 120 in cash. Pay yourself back 50K. Boom. The money never left you. The cash flow never left you. So now you've got 120,000 out here doing whatever, right? To expand even more, right? Invest another 50, right? Or whatever they may choose. Doesn't matter. Either way, they've got 120 right here. Pay themselves 50. They got 100,000 in here plus the interest that they earned. right? Never lost their cash flow in the process. This person's a happy business owner, right? And they never paid any interest to borrow the money, even though technically they're paying it right here, but it offsets as if they didn't pay a dime because they made money here, right? They made tax-free earnings here, and they made earnings here when they went and used the money. So they had money working for them in two places. And that's the whole point of this lesson, mainly, is offsetting interest costs and having money work in two places, whether it's to pay off debt, make an investment in your business, invest in real estate, right? And ultimately increase your cash flow, increase your wealth so that you can leave a legacy behind for the family, live the life that you want to live, right? And ultimately just enjoy everything there is that this life has to offer. So I hope you guys enjoyed this quick little series on how to offset interest costs. My name is Denzel. I'm your teacher. I'm your finance geek. Okay? If you really like this channel, subscribe, become a part of the family. I'll have a form in each video that you guys can fill out to work with me one-on-one. Okay, so you enjoy the rest of your day. Thank you very much.